So, yeah. So stocks are still opening. So you just had about 900, 800 stocks on advances and declines. And I think we should be able to look at it in about a minute, 2 minutes to get a better sense. More down than up, but nothing overwhelming in that sense. Bharti, Tech M, Adani on one side, Trent, SBI, Adani Ports on the other side is what you have. Remember, the Adani Group stocks all had a massive run from last Friday. Monday, big move. Yesterday, of course, they all pulled back between 3 and 4%. So keep an eye out on that as well. But this is the open, about a 50 or 55 point lower start. And we're, within the first 1 minute of market open. Survik.
Okay, so 57 down. Let's see what all is down. Hero Moto, Bajaj Auto, Aisha, Tata Motors. So basically, auto is cooling off. Let's see where Maruti is. Maruti is actually bucking the trend. There's a little bit of a green on Maruti, about 30 to 35 rupees up on Maruti right now, thanks to the broker calls. Some of the bigger banks are weak. ICICI Bank, Axis, both on the lower side, losing about 0.5% to about 0.7%. HDFC Bank also slightly lower. So banks on the lower side as well. Then what else is correcting? Bharti, Airtel, L&T, Tata Steel is on the lower side. There's some profit taking on Eternal as well this morning. Titan is lower. So it's actually, a clutch of different sectors. The outliers on the upside would be Trent. Trent is seeing some traction, 1.3% up on Trent right now. There's Asian Paints, which is managing 0.5% of an up move. And SBI is bucking the overall banking weakness. Most of your private sector banks are lower today. SBI up about 0.7%. But yeah, the Nifty is still nursing a cut of around 70 points, Nigel.
Well, that's right. A few stocks that are actually calling for special attention in today's trading session. You have Minda Corp. They've released their vision for 2030. They're looking at scaling the revenues by around 3.5 times. They're talking about margin improvement. They're talking about the net debt to equity number to decline to 0.3 from around 0.6. And ROCE to move up from 20% to 25%. Street likes their vision. Execution is going to be important. Motilal Oswal, they have come out with a note on Lotus developers. They have a target price of around 250 rupees. The street likes that. They're finding that note, of good consequence. In fact, they see good rationale, it seems. For the time being, the stock on large volumes is up. Lotus developers is the stock that we're talking about. So that comes up for you on the screen. A couple of other names. Wheels India, we saw a large trade out there. So the stock is up 7.5% higher. One of my colleagues had pointed that out. Dilip Bilkon, good news coming in there. That stock is up close to around 3%. And Borosil Limited, that one as well is up and about in today's trading session, up close to around 5%. Bajaj Consumer, I'm not sure what's gone on there, whether there is some kind of a corporate action or it's gone X something. We'll have to keep an eye on that. Stock is down close to around 6% as we speak. So that's one notable loser in today's trade. And Ashok Leyland as well, after seeing good buying yesterday, falling on decent volumes, down 3%.
All right. I think that's basically what we have as far as market open is concerned. We'll have more coming up as we go along. So Nifty at about 25,100. We're down about, 66 odd points. And just sort of settling down. More action in just a bit. Gautam Shah is founder of Goldilocks Global Research. He's with us now. Gautam, good morning. Great to have you with us here. Thank you very much for joining us. I'm not sure, were we stock when we were in the midst of this 1,000-point move, Gautam? Or I think we spoke before, right? So how do you assess prospects now? Still in a range, at the cusp of a bigger move, or back down once again from the upper end? What's your sense?
Good morning, Prashant. Well, I think we spoke at the starting of this 1,000-point move, and it was a time wherein we were going through the perfect storm with just about everything against the Indian market rally. But the way markets have reacted to the Trump tariffs and all other negatives that we have been dealing with, I think is quite commendable. And it is fair to say that domestic liquidity has won over once again. People still question valuations. People still question, whether our markets are good enough to actually scale back to previous highs, because most other markets in the world are actually trading at lifetime highs and beyond. But I think I'm quite encouraged with what has happened in the last 2 weeks. I think the screen has looked good. It's been very vibrant. There is widespread participation. A lot of stocks which were underperforming for a long period of time have come back really well. And I think what's happened in the last few days is just a cool off after that 1,000-point rally. So 25,070 24,990 and then 24,900 in my book would be the first supports. I think this market is now a buy on dip. And from around these support levels, we should possibly see a turn, taking the Nifty back to 25,500, which I think is now the key level. And once we are past 25,500, I think we should be preparing ourselves for lifetime highs. So I think the setup looks pretty good. Stay in the right pocket, stay in the right stocks. Don't look at the Nifty too much, and I think we should be sorted.
Don't look at the Nifty too much. Actually, yeah, I mean, the Nifty did manage to climb above 25,000. So maybe higher levels ahead, got that point. Gautam, so if not the Nifty, then where else should we look? Do you see any emerging trends? I mean, let's start with the market's favorite trend over the last 1.5, 2 months, which is consumer and auto. Do they look good for more?
Well, firstly, Surabhi, I think over the last 5 years, we've seen a lot of market cap rotation. So when the Nifty does not do well, people are a little discouraged that, markets are not running up the way they used to, but then they can't keep running up given our levels and given our evaluations. So I think the large caps have taken a bit of a backseat. I mean, just a case in point, what Bajaj Finance has done versus Asian Paints. I think that's just the writing on the wall that if you are in the right pocket, there is clearly outperformance. So I think given that, there are some new leaders which have really emerged in the recent past, auto being one of them. In fact, I spoke about it in our last interaction. The auto index, as we speak, is near lifetime highs. And I think the news flow around GST has clearly been the trigger for the same, which I'm not surprised at all. It's a big one. And I think it's going to see much bigger upside. So I think 27,700 was our working target. We got close to it. But I think over the medium term, you could even see a 30,000 on the auto index because standalone stock setups continue to look positive. On the other hand, people thought that FMCG will start doing well because of the GST trigger and all of that. That's not worked. FMCG has been one of the biggest underperformers of the last 3 weeks. And in my book, it is still an avoid. So stick to auto, stick to metal, stick to banking. Those three are our top picks.
Okay, all right. Hi, Gautam. Good to see you. Let's take a break from the equity markets. What about gold? Where is that one headed? $3,800. Wow, what a move out there. Where is that headed?
Well, it's left everyone behind and every asset class behind, isn't it? In the last 18 months, I remember I was at a CMT summit a year and a half back, and it was at 1800, and all global strategists were discussing whether S&P or gold. Clearly, gold has won, and I think it's going to keep winning. I think 3850 is an important near-term resistance. I don't think these are levels to buy, but this is a structural mega trend which is going to continue over the next 3 to 6 months. So if somebody is long from lower levels, please stay invested. But more than gold, as I've said in all my recent interactions, I think the bigger opportunity is silver. As we speak, we are at $44 international prices, and I think there is another 20% upside very easily towards $50 and beyond. So stay invested. I don't think there is a case to book profits in precious metals and move to equities.
Gautam, that's an important point. Those who are already invested, it's like one of those stocks which has gone from 100 to 1,000. And it's still looking good, but then how do you buy it? $1,000 now, right? Even though the structure, etc., looks good. I have a friend who keeps talking about gold, right? Has been talking about gold for a while. But yeah, it's one of those things, Gautam. I mean, I think we've spoken about. We've been talking for at least 15 years now. Global financial crisis, currency debasement, and how gold is this new thing. But nothing happened. $1,000 in 2008, but then it suddenly moves, right? 1,000 to 2,000. It took 12 years, and from 2020, it's almost doubled in 5 years. It's like any other asset class. You can never time it, although the drivers were there even back then. Sorry, go on.
Well, you don't tell a technical analyst you can't time it all the time. And I think what happened over 7 years, I think, is the hard work that gold put in that period, where everything was in place in terms of fundamentals for it to do well. And the kind of geopolitical environment that we live in now, it's very easy to actually build a case for gold. And the industrial use argument for silver, I think, is really big. So while gold has done very well over the last 18 months, I think the next 12 to 18 months will still belong to silver.
Yeah, that's an interesting one. वो नहीं लिया तो silver में chance है, right? I mean, I think let's see. But point taken, Gautam.
But I was looking at some sobering stats, and everybody does this, right? India versus the rest of the world. So if you look at India versus the MSCI All World Index, and I'm just checking my numbers again, Year to date, we're down 16%, which is fine. I mean, you can't be outperforming every year. But the bigger worry is that in dollar terms, we have underperformed that index by 37 percentage points. So, there is that question of, what next? And I think a lot of investors here are very savvy now, Gautam. So therefore, they're wondering silver or gold, and they're wondering whether buy this dip on the Nasdaq or, go and buy, China stocks because you have a bigger tech play over there. So let's broaden the conversation. The US market itself, do you see it continuing its winning ways? The Fed chief thinks it's overvalued, but what are the charts saying?
There was so much debate in the US markets about debt and inflation and Trump's policies, valuations, and whether AI has been discounted to a greater extent. And a lot of people stayed out thinking that this is a bubble, this cannot sustain. But the US markets have done fabulously well. And we've been tracking it very closely over the last 6 to 8 months since we now have a product. And I'm amazed to see the kind of moves that US markets are seeing. There are still no signs of topping out. My working target on the S&P 500 is 6960. I think the Nasdaq can do another 10-12%, and many of the top stocks are still very well placed. So if the mother market is still in a strong bull market, and many other markets in Asia and Europe are still trading at lifetime highs and doing well, I mean, the case which I made last time, India will have to join the party. The world will not join India's underperformance. India will have to join the world equity market, bull market, which is playing out. But the key point is, India versus the world. Yes, we've underperformed, but from a Nifty perspective. But if you are in the right stocks, in the mid caps, in the small caps, I mean, look at an Eternal, just a case in point. It's at 335 today. I mean, what an incredible run that stock has seen. There are many such big winners which are in the making right now. So I don't think the top 100 is going to do anything in the next 6 to 12 months. So the Nifty might not give great returns, but the mid cap, small cap, because the domestic money is actually now going seriously there, I think is where the real opportunity is.
No, absolutely. I couldn't, agree with you more and take your point. And why mid cap, small cap? You gave the example of one large cap, Eternal. Look at a stock like Maruti. Like, who doesn't know Maruti, right? And that stock is up 50%. So if you're in the right stock, then it's a very different market for you. So give us some more clues, some names. I don't know, you don't usually talk stocks, but some idea where the structures are looking, really promising at this point in time. Maybe some individual names or some hints around sectors, if not stocks.
See, I think last time I spoke about auto, that's already played out. I think the top stocks have done very well. I don't think they're a buy at current prices, but I still feel that metals is the next big opportunity. I do know a lot of my fundamental friends who are not able to join the dots and build a fundamental case for metals. But look at what top metal stocks have done. JSW Steel, Hindalco, Tata Steel, SAIL, Nalco. Not recommendation, but I think some of these stocks are trading near lifetime highs and still very strong on the charts. So from somewhere around 10,000, which is where the NSE Metals Index is, I wouldn't be surprised if you get a 25% move on that index. So I think metals is really the next big opportunity, which I've maintained for a while, and I think that's going to continue. Banking, I think, is going to do well and possibly start moving towards levels of 57,500, led by the PSU banks. I think I love the setup of some of the top PSU banks, and I think they are likely to be big winners. And the dark horse sector, which not many people are talking about right now, is the comeback of PSU stocks. They were in a mega trend, went into a consolidation for a year. Everybody gave up on it. Valuations are comfortable, nothing to do with foreign policy. And I think they are under-owned in some sense. So I think PSU could also be the next big opportunity over the next 1 year.
PSU as in only the PSU banks, or overall you expect the CPSE universe to start firing up?
I think PSU banks will outperform for sure within the entire PSE basket, but the entire PSE basket is also likely to do well. So if somebody wants to just look at an ETF and just participate on the index, it might be a good idea.
Yeah, no, it's taken a nice break, right? Last couple of years, the PSU Bank Index. By the way, you mentioned steel, Gautam, right? And you're talking charts and price action. We have a the fundamental view coming in on steel in just a bit from now. So we have the Steel Secretary, Government of India, joining us shortly, Mr. Poundrick will be able to sort of explain to us where the government sees, because it's an industry with a lot of government focus. It's a fundamental building blocks industry, and I think it's a conversation you don't want to miss. Coming up in just a bit from now. Anything else, Gautam, before we wrap up? Any other single stock ideas?
No, I think the point is stay concentrated. I mean, don't do too much. I think that's really the key takeaway, because we've seen what's happened with IT, we've seen what's happened with FMCG and pharma, capital goods, all underperforming. Don't commit where there is no relative strength. I think that's the key takeaway. Stay where there is a quality strength and reasonable valuations, and I think we should be good.
All right, we'll leave it there. Gautam, thank you very much for joining us. Really appreciate your time here on CNBC-TV18. And look forward to the next one. We're done about what? I think the Nifty should come up on your screen. And we'll just take a quick look at it and sort of, move on from there. 100 points clean. 25,067 is where we are starting this morning as far as prices are concerned. And the Bank Nifty, mid-cap, small-cap indices that have come up. And maybe we just sort of run through the auto, financials, and the metals indices as well. Metals perked up second half. Autos did quite well. There are, of course, a couple of brokerage calls as well for auto. Financials on your screen, metals and auto next. Metal index is down about a quarter, so not moving too much. And steel there in particular is the one that I'm talking about. And, of course, the auto stocks, which have had a bit of a move, down about 0.75% at this point. Just the rupee as well, the dollar rupee, and where we are at. Sharp move yesterday. Lata, of course, in the morning was with us, 88.71. So it's absolutely kind of sort of on an even keel this morning. Not very much by way of a change. Minda Corp is what we want to put the spotlight on once again. Sud is here with us to do exactly that. Sud, over to you.
So in the opening hour of trade, stock has risen as much as 10%. Currently, it's trading with a gain of nearly 8%. And this has come after companies released Vision 2030 document in which it has set some ambitious target on revenue front. It expects an increase of almost 4 times to ₹17,500 crore from the current level of 5,100 crore. On the margin front also, it believes that it will increase to 12.5% from the current level of 11.4%. And on net debt to equity ratio, it might decline to 0.3 times from current level of 0.6 times, and on ROCE, it might exceed to 25% from 20%. And on the revenue mix, it believes that the contribution of passenger vehicle will increase to 25% from current level of 14%. But at the same time, for two-wheelers, commercial vehicles and three-wheelers, contribution is going to increase over the next 5 years. What are some of the few growth drivers? First one, the company will focus on premiumization. Second, to increase the kit value. And for both two-wheelers and passenger vehicles, it believes that over the next 3 years, that is by FY28, kit value is likely to double. And third is on export front, it's targeting 37% CAGR over next 5 years versus 18% that company has seen from FY21 to 25. And lastly, in the recent past, it has signed some of the few JVs from Japanese companies and Chinese companies, and it believes that those also will aid the growth going forward.
Okay, all right. So that's in the last few years, I think the management has spoken only to our channel. Recall, the stock was a third of what it is today, but now they've come out with their big vision. So hopefully they rejoin on the channel and give us what's the trajectory from here on. At that point of time, the stock was around 200 rupees when they spoke to us last. Moving across to Upasana, she's here to tell us about Bajaj Electricals. Upasana?
Good morning. So the board has given a consent to acquire Morphy Richards brand and intellectual property rights in India and across neighboring region from Glen Electric Limited for a consideration of nearly about 146 crores. Now, mind you that the company has been manufacturing and marketing Morphy Richards products since April 2002 in India, positioning it in the premium home appliances category. So this strategic move is expected to strengthen its position in the home appliances and consumer electronics portfolio. So overall, it certainly bodes well for the company as company gets the brand rights in the South Asia markets such as Nepal, Bangladesh, Maldives, etc. So we can certainly see the stock surging higher in trade today.
Okay, all right. Thanks a lot for that, Upasana. But as promised, let's focus on the fairest pack. We have Mr. Sandeep Podrick, the Secretary of Ministry of Steel, who joins us on the show. Hi, sir. Good morning. Good to see you win. And kudos to you as well as the team. Has protected the domestic steel industry from all that's going out in the globe and, in fact, the uncertainties that we're seeing on the trade front as well. That said, I wanted your opinion on a couple of factors. One is, will GST 2.0 spur further demand for the steel sector? If you could give us your quick comment on that. And demand could be relatively impacted because of relatively lower spends coming in from the government, maybe lower demand from the government. But do you see green shoots coming up post-Diwali?
So, thank you and good morning. Let us start with the impact of GST on the steel sector. We see that the consumption is likely to grow with the change in GST, the GST reforms. And primarily, 4 sectors, in our opinion, will impact the consumption of steel and increase the consumption of steel. First is the construction sector, because as you know, the cement GST has been reduced. So that will incentivize or encourage more construction, and steel is one of the important factors or inputs in construction. So that should increase consumption. Second is automobile. Again, most of the automobiles or autos have been brought into lower GST band. So that should incentivize more steel consumption there. Household consumer durables like refrigerators, ACs, again, lower GST, more production, more consumption of steel. And one more thing which should, so that's on the consumption side. There are more sectors which will incentivize more consumption. So we are expecting that in coming months, the steel consumption will grow. We should also take into account the fact that we are the only major economy in the world where steel consumption is growing in double digits.
Yeah.
For last 3 years, we are growing at 12%. And in the first almost half, April to August of this financial year, we have grown more than 8% in terms of consumption. So I see an optimistic scenario for steel consumption because of GST reforms. And I also see that as the rainy season ends, we should see more consumption in steel and more demand coming from all sectors.
Okay.
So I will presume that the steel sector will continue to show robust growth on the consumption side.
Got it. And for the year, sir, we should be working with what, high single-digit growth?
So as I said, till now it's 8% for April to August, but I would dare say that because of GST reforms and because of the coming construction season coming, we should be somewhere around 9 to 10% at least in the consumption growth.
Mr. Pandrik, sir, thank you so much for being with us this morning. Surabhi here. I just had a question around how you're observing moves in China and their implications for the Indian steel sector. Now, there's already, a safeguard duty that has been announced. But a lot is going on in China, and there's a lot of talk of this so-called anti-involution policy. They're trying to set their house in order, reduce disruptive price wars. What is your reading of the situation? Are you anticipating more Chinese steel in global markets, including India? Or do you think the safeguard duty is adequate? And right now, the Indian steel sector is well protected?
So you're right. A lot of steel is coming into the international market. And there's an article you must have seen today which talks about a lot of exports from China to other countries. But as far as steel is concerned, if you see the present year data, the imports from China have reduced significantly as compared to last year. That may be due to safeguard duty, provisional safeguard duty, which has been imposed by the government. And as DGTR has recommended to continue the safeguard duty, I would presume that domestic steel sector should get reasonable price and should not be affected because of the cheap or substandard imports.
Okay.
Also, there are some anti-dumping investigations going on, and DGTR has already recommended imposition of anti-dumping duties on 2 categories of products, one from China, one from Vietnam. So, all inclusive, that's safeguard duty, anti-dumping duties after DGTR recommendations and after the process. I would say that domestic steel sector should not be adversely impacted because of cheap or substandard steel imports. I don't see that as a possibility, at least in the near term.
Right, absolutely. Mr. Pandrik, hi, good morning. Prashant here, and good to see you, sir, always. provides a really high-level guidance on the industry going forward. Just a quick word, Mr. Pandrik, on on exactly that point. The expectation is, and this is of course from a financial market standpoint, that everything from refined products to steel to chemicals out of China, which is the largest maker of all this stuff, is going to reduce because this anti-involution, which my colleague pointed out, basically race to the bottom. So they want to prevent a race to the bottom in terms of pricing. So they are shutting off old capacities and many such measures, basically. Of course, it will take time for all of this to show up. So basically lesser Chinese exports into the world for everything, including steel. So that is one. So could that, in your opinion, if you've looked at this issue, provide a slightly more structural uplift to prices everywhere? And second, sir, the rupee here against the dollar has, sharply depreciated. It's down 3.5% year to date. So I just wanted to get a sense if you've got an eye on that as well. And any thoughts there? Yeah.
Yeah, let me talk about the overall import-export scenario and the impact of measures taken by the government. So if you see our exports in this financial year from April to August have in fact increased about 16% as compared to same period for the last year. And our imports have reduced 32%. So while our imports and exports both are not a big chunk of our total domestic consumption or domestic production, they have an impact on the pricing scenario because cheaper imports or whatever imports are happening, they have an impact on domestic pricing, what we may call a benchmarking of the domestic pricing. And if cheap imports come, then the domestic prices go down significantly. If we see the pricing scenario for domestic steel for last maybe 3 years or so, the domestic steel prices have gone down significantly as compared to say 22, 23. But after the safeguard measures by government this year, they have stabilized to some extent, but they are still at a lower level as compared to what they were earlier. On your question about
the currency,
the policy changes in China and the impact on India, I would say that should help the overall steel industry because right now the steel industry in terms of pricing is not very high, means the pricing is at very low level as compared to what they were getting earlier. So any such policy changes should help the industry, and that's also important because we have to invest in the steel sector to cater to the domestic consumption growth. We are targeting at 300 million ton by 2030. On the dollar rupee, yes, that will obviously have an impact, but impact in both in terms of raw material imports because we import substantial part of coking coal. So a change there will help, depreciation will help. As we don't have much exports, that impact I don't see because our overall exports were only 4.5 million tons last year as compared to total production of 152 million tons. But on the raw material side, that may have more impact on the steel sector.
Mr. Pandrik, just a point. Now, taking what you said, all of it put together, you're saying, first of all, there's no reason to worry about any major China import surging. The safeguard duties will take care of it and the anti-dumping duties. That coupled with what you just told Nigel, that the demand is looking good, GST is looking very, very good. So the stock market seems to be expecting a price increase. I mean, if you go by some of the brokerage reports, etc. So are those hopes well placed? Would you also expect some price increases in the coming months?
I would not like to comment on the stock market trends. I can say that the steel sector,
steel prices,
as far as we are concerned, yeah, so that's what I'm saying. So that is looking good. I am optimistic that steel prices should, because of the increasing consumption and reducing imports, the prices of steel should balance now in coming months, and the industry should show more returns in terms of revenue and everything. But that's the steel sector per se I'm talking about. So
right.
I'm optimistic about the steel sector in the country.
Right, Mr. Pondrik. In fact, we had put out a piece yesterday that the domestic makers, they have a good argument to go ahead and increase pricing because consumption will increase. We're at a big discount in comparison to Chinese prices as well as FTA countries' prices. And we're getting into the seasonally stronger period post the monsoon. So let's keep that aside. Just a quick word on the final decision with regard to the safeguard duty from the Finance Ministry. When is that expected, if you could tell us, on steel? And is there a possibility of some anti-dumping duty on stainless steel imports as well?
So the safeguard duty, the provisional duty is applicable till I think first week of November, 6th or 8th of November. So a final decision should be taken before that for continuing the safeguard duty. Means that issue should be finalized before that, I would presume. And on the anti-dumping duty on stainless steel, there is a investigation going on by DGTR. So as soon as the DGTR reports comes in, government will take a decision based on that report.
Oh.
That investigation is still under process.
So we should expect that in the next couple of months?
Normally they take a few months, 3 to 4 months.
Okay, so on stainless steel, there's an investigation. We'll wait to hear from you all. Let's talk about RINL. The last time you joined us, you were telling us that the pending dues are gradually coming down. They've fired up a couple of their furnaces. And the dues actually were to a listed company, which is NMDC. So the street would like to understand what is the pending dues from RINL? How much was it? How much has it come down to?
So RINL, as you know, last year they were in pretty bad shape. Yes. They had total dues of about 35,000 crores, both means roughly half to the banks and roughly half to the private creditors, including NMDC. Now, after the government's package, they have improved substantially. They are running now all their 3 blast furnaces. Roughly, I would say 75 to 80% capacity, which they have never done in the past on a sustainable basis. So operationally, they are doing pretty good. On the finance side, they have reduced significantly their banking loans, banking liabilities, which in turn means that their interest rates have come down for borrowings from the banks.
Okay.
They have started paying back the private creditors too, including NMDC. And I would presume it will take some time. We should understand that their financial position was so precarious that it will take some time for them to totally balance out. But I would say they are in much better position as compared to last year overall financially.
Yeah, if they're paying their dues, then it's good news for NMDC as well, because otherwise there was outstanding in terms of a receivable. Final question, sir. If you have any kind of sneak peek, things are looking up for the steel sector. NMDC Steel, will it get divested in the remainder of this year? They've turned around things quite a bit. Utilization levels have moved up. So quick comment on that. And what about SAIL? If things are going to improve, could we see an OFS coming in?
So NSL, yes, you're right. They have significantly improved their performance. In fact, in last 1 year, they have almost reached now almost 100% capacity utilization on the hot metal side and roughly 80 to 90% capacity utilization on the mill side. So they have improved significantly. On the divestment issue, does decision of the government still stands. As you know, there is a cabinet decision that NSL will be divested. So that decision still stands. How fast it will move, I would not like to means it's not Ministry of Steel which undertakes the process. So that's for the DPUM. They can comment on that. On SAIL, yes, they are doing good. One thing which about SAIL that now they are focusing on mining too. They are in fact the second biggest miner of the country of iron ore, and now this year they have been given a target to also sell iron ore in the market. and increased their iron ore production significantly.
Okay.
So both on the iron ore side, mining side, and steel side, I would think that sale will improve and show significantly better results. They are also planning a lot of expansion. So I would say that in this year, they should finalize decisions on those capacity expansions.
Okay, interesting to see if things are looking up, whether there is some OFS that will be due. But we appreciate you joining in, sir. You're sounding optimistic on the prospects. Maybe the domestic steel consumption could grow by around 9 to around 10%. The ingredients are in place, and the government of India has put in some good protection measures, which saves us from what's going on the global uncertainty front. Thanks a lot for joining in. Well, on that note, we'll slip into a short break. On the other side, we have Jain, the CMD of Jain Resource Recycling, who will be joining in to talk about their 1,250 crore rupee IPO that opens up. Stay with us.
Welcome back. Well, as promised, let's get to the conversation around a new IPO, another company coming to the street. Jain Resource Recycling is coming out with an issue, which is about 1,250 crore rupees. The IPO is opening out for subscriptions today. Jain, Chairman and Managing Director at Jain Resource Recycling, is with us. Mr. Jain, thanks for joining in. So we want to, of course, understand the company a little better, and we have 3 key talking points. Let me lay them out for our viewers. Of course, we want to understand the purpose behind the fundraising capacity, the fundraising activity, your current capacity utilization and the scalability of the business, and of course, what you see ahead for your margins. So let me start by telling our viewers that this IPO is a mix of an OFS as well as a fresh issue. The offer for sale component is slightly larger at 750 crores. Fresh issue is 500 crores. That's the money going towards the company. So tell us, sir, this 500 crores, what's the utilization? Why did you feel the need to come to the market?
So good morning. So we, out of this 500 crores utilization, we are going around 375 crores will be paying to clear our debts, and around 125 crores will be general purpose in the company.
Okay. So, all right, got that. So you will be paring down some debt. Let's also focus on what the company does. And Nigel has been explaining this to us. So basically, you are into the recycling segment in the non-ferrous space. So tell us what your further expansion plans are. I know you can't give very specific numbers, but what is your current capacity utilization? How are you planning to scale up the business? Do you have some clear capex plans ahead?
Yeah, so we have current capacity around 3 lakh tons of non-ferrous metals recycling, out of which I feel we'll be utilizing around 70 to 75% capacity utilization. And we have expansion plan for copper product, mainly for copper cathodes, copper wire rods, and bus bar, and other value chain. So the expansion will be the money come from expansion will be internal accruals only, and the balance 500 crores which I already explained for going for in the company. Company is going to
Okay, got that, sir. Good to have you on the show, Mr. Jain. This is Nigel on this side. Quick couple of questions then. You said 375 crores will be the debt reduction. So assuming that interest cost will get saved will be roughly around 40 crores, 35 to 40 crores. That would be a fair assumption, right?
Yeah, approximately you're right, around that percent for the bank CCLP, they're going to reduce it. So we'll save the 40%.
And post this repayment, what will the debt number come down to?
What was the question?
Post the repayment of 375 crores, what does the net debt come down to?
The net debt compound to will be around 500 crores.
It'll come down to 500 crores. So currently you're saying it's around 875 crores. Post this repayment, it comes down to 500 crores. You got that, right?
Yes.
Okay. All right. Tell us how the revenue mix will look. As you're saying, the focus is going to be on copper for further expansion from here on. Currently, it's broken up into lead, copper, as well as aluminium. So what is the ideal revenue mix you're looking at? And also in terms of capacity from 3 lakh tons, if I got that number correct, where is that number headed, say in the next 2 years?
So out of the revenue mix, you're saying we are majorly doing copper, which is around 45 to 50% around copper. And the balance is around 40% lead and rest is aluminum and plastic. And our focus, of course, on expansion of the copper. And in the future, we'll be expanding more in copper, which I have explained to you. And the revenue will be going up more for copper. And I think it will reach to 60% of total revenue will be copper.
Brilliant. All right. So we got that in place as well. Could you tell us what is your target in terms of market share? We have some brief numbers for every segment, but you must be having some target in mind. So if you could help us out with that number. And since we're talking about your revenue mix, exports have been gradually going up. What is the targeted domestic export mix you're looking at?
So we are looking around 60% exports. What is the last year performance we have? So we are planning to go more for export side, of course. And domestic market is growing as India is growing very fast. So we also have a lot of requirement of copper and other metals in domestic market also. And my focus more will be on to grow the export because we are sitting in a port which is in Southeast Asia and the freight is very negligible to all those countries. We export to Japan, Korea, Singapore, China, and many other countries in Southeast Asia. And the freight to these countries are very marginal from Chennai port. That gives a cost advantage to us for exporting more material than selling domestically.
Mr. Jain, good to have you with us here and good luck with the IPO. Just a quick word, you know, F525 over 24, there seems to be dramatic improvement in numbers. You know, revenues are up 60%.
Yes, you're right. So what happened in our business of recycling, we have to source more and more. Sourcing is the key point in our business of recycling. We can sell as much as possible. There's a thing called order book here. It's only purchase book. So our sourcing gone up in last 2 years because of the global sourcing, and we have increased the team network in many part of the Western countries, mainly US and other part of the South America. And because of this, the lot of the cultural shift and the technological changes and the technological disturbance, a lot of products become dismantled, and that's why our sourcing is going more and more up. And we already have enough capacity. We always keep 20% capacity spare to get more raw material. That is why the revenue is going up because of this more sourcing of raw material.
So just a quick question. Capacity is around 140,000 right now?
No, it is around 3 lakh ton total for including lead, copper, aluminium, including everything. And we are utilizing around 75%.
Okay, all right. Okay, got that out of the way then. Are margins better in exports compared to the domestic business? And also, you know, we have got a listed peer, which is Gravita. They are doing relatively better margins, though I think in size you are a little bit bigger. So do you have levers in place to improve your margins from here on?
Yeah, so in the business of recycling, it is about scale. So when you more and higher the scale, lower the cost of production and better EBITDA margin. That is the simple funda of this business. So we have to do more and more sales and increase our production. Now, of course, the peers, the Gravita is not exactly like us. We are 60% in copper and around 30-40% lead. So we are alike to a certain portion, but not 100%. And export margins are better because of the low freight, and it depends on the prices of the LME. So wherever the demand, we sell our product wherever the net landed price to us, and we compare that. Based on that, we sell our finished goods to the domestic market or export market.
Okay, all right. So part of this is also an OFS. Do the promoters have any kind of plans to infuse some more money back into the company since business prospects are looking so good?
If company requires, we definitely pump the money more. But I don't think company required the cash because they got enough cash to grow.
Okay.
And right now the internal accruals are very high. So I don't think company will be requiring extra cash in the business.
Okay, all right. Just a thought, sir. Since there is some money that's going back to the promoter entity and some part of it is going into the company as well. We appreciate you joining in, sir. Debt is going to be coming down drastically. You're sounding optimistic about business. And as you said, the focus is going to be on the copper part of the business from here on. As volumes and value picks up in terms of sales, the margins will improve. We look forward to speaking to you, sir, on listing as well.
Thank you, sir. Thank you very much.
Okay, all right. Well, let's go back to the markets. Then we have Vinay Rajani, the Senior Technical and Derivative Analyst of HDFC Securities, who joins us. Hi, Vinay. Thanks a lot for joining in. Markets down 100 points. Buy the dip or not?
Yes, so we have seen 400 points correction from the recent swing high of 25,448. So if I were to see the retracement levels, the Fibonacci retracement levels of the entire 1,000-point rally, which we saw from the level of 24,400 to 25,400 odd level, 38.2% retracement comes in at 25,050, and 20 days exponential moving average for the Nifty is also coinciding around that level, which is placed around 25,045. So a couple of evidences which is suggesting a strong support in this range. So yes, I think the way some sectors are still performing well, PSU banks, metals, and some power stocks have started participating in this market. So I think this is an opportunity. I think from this level, considering the strong support from a couple of evidences, it looks like that one can go long from here. I would suggest a stop loss at 100 points lower from this level. So around we can say 24,980 to 25,000 should be the stop loss in trading long position. And overall, we can expect some recovery from this level. So yes, there are many opportunities in the in this particular market. Even in the correction, we can see some stocks performing well. So yes, one can take long bet with a stop loss of 100 points in the Nifty.
Vinay, in terms of specific trades, what would you have?
Yeah, so some stocks are performing very well, like the power stocks have started performing. So NTPC has given a fresh breakout from the consolidation. It looks good on the chart, on the short-term charts. So NTPC can be traded long around 344. I would suggest a stop loss at 338. On the upside, I'm expecting a target of 354. Second pick, I would take from the PSU bank, which is continuously doing well. The Bank of Maharashtra is looking quite good. There has been a downward sloping trend line breakout on the weekly charts, and I think this stock can do well from the mid-cap PSU bank segment. So around 57.41 can go long. I would suggest a stop loss at 56. On the upside, I'm expecting a target of 59.50 in next couple of sessions. Thank you.
Got that. Let's... Vinay, thank you very much for joining us. Good speaking with you, and good to have you with us. Well, markets down about 80 odd points. 1,400 stocks are lower on the NSE. About 1,280, 1,290 stocks are higher. So that's where we're looking at as far as market breadth goes. We take a break. We are back. Commodities in focus. Manisha is going to be joining us to help us with that. So stay tuned. Coming up.
Welcome back. Equity market still dealing with a cut of about 0.25%. Let's find out what's happening in the world of commodities. And we have Manisha joining in with the latest. Manisha, what do you have your eye on this morning?
Well, I'm looking at precious metals, not gold, not silver, but it is platinum, which really seems to be surging in the overnight markets. So even as gold and silver have taken slight pause at those all-time highs, look at what platinum has done. 5% of gains in the overnight market. You have 8% up on a week-on-week basis. It is 12% up on month. It is 67% up in this year. So it has clearly outperformed most of the other commodities. And we're looking at 50% of gains coming in for platinum in the last 12 months as well. So very, very strong gains coming in for platinum there. Well, if you look at the overall markets, as I was telling you, platinum clearly outperforming with 67% of gains. You have silver, which is 53% higher, all-time highs in India and 14-year highs in the international markets. Gold is trading at an all-time high in various countries, but is up 43% for this year. And then you have palladium as well, up 40%. So it clearly belongs to precious metals when you look at 2025 as a year. But I want to focus on platinum right now because if you look at the global supplies, they are the lowest in last 5 years. We have seen constant deficits continuing into the market, and the weak US dollar has been supportive. And when you look at platinum, the buying also has increased because it's relatively affordable than gold. It's trading at around $1,495 an ounce right now, and gold is at around $3,800. So as you can see, it's nearly half of what gold has been. So clearly the affordability comes in from there. The platinum prices are trading at an 11-year highs, but very far from its all-time highs of $2,166 an ounce. And we are currently trading at around $1,500. So really far away from those all-time highs in case of platinum. But the way the fundamentals really seem to be working clearly are supportive. There is a statement from World Platinum Investment Council which says that after last year's big deficit that we saw into the markets at around 992,000, this year as well could look at 850,000 ounces of a deficit. That clearly has been supportive there. When you look at the platinum uses, while of course it is more of an industrial metal and 45% of usage comes in from automotive, but jewelry as a demand continues to increase as well. So 27% is a hefty number when you look at platinum in sense of jewelry demand. And then you have industrial, 20% comes in from there. Investment seems to be surging as well. 7% of platinum now goes in investment, and hydrogen economy consumes nearly 3%, which also is expected to go higher. With deficit and then demand increasing, platinum perhaps should be on your radar as well.
Why should gold and silver have all the fun, right? Why should platinum be left behind?
Well, that's the state of play. Precious metals, precious commodities getting even more precious by the day. Well, we'll take a quick commercial break here. On the other side, our special segment is the economy. Latha in conversation on the impact of H-1B visa fee hike and the fall in the rupee sharp fall yesterday. Samira Chakrabarti of Citi and Chandresh Jain at BNP Paribas on the other side, joining her in just a bit.
Welcome to It's the Economy. The rupee took a sharp knock on Tuesday, hitting a new low of almost 88.80 and losing over 0.5% in one day. That's an outlier kind of fall. Trading today has begun on a steadier note, with dealers telling us that Reserve Bank is supplying dollars. But the market's fears are what may be the future cause of remittance inflows, current account and capital account deficits. That remains the big fear. Citibank has put out a comprehensive note on remittance flows from the US alone, though, as they say in the report, some of it is based on educated guesses, since we don't have exact data on how many are H-1B visa holders and what is their annual remittance. I have with me today the author of that report, Samiran Chakrabarti, the chief economist at Citi India. I also have Chandresh Jain, the head of FX trading for BNP Paribas, to understand both the current account deficit issues and, of course, the cost of the rupee. I'll come to the arithmetic in just a minute. Samiran and Chandresh, thank you very much for your time. Chandresh, if you can just tell me what is the, sentiment you're getting on the trading desk. Do you think people are going to come and buy out more dollars?
No, I think the sentiment is not very good. We had a lot of negative news regarding INR. It started with equity outflow, which was there in the last 3 months. Then on top of that, we got 50% tariff from US. And now the big news of H-1B visa hike. It's certainly bad for remittances, but it's also bad for INR as well as an overall concern. And lastly, I would say even, the gold prices, which have been going higher, I think that's also playing a part, because India is a net importer of gold. So as gold prices go higher,
Chandresh, I'm just asking you, at the moment, since the fall has happened,
yes,
we are, so much has been priced. Are you looking at 89 as a likelihood? Are you looking at more depreciation from here?
I think the more depreciation will come. So like I said in our last communication, 87 to 89 is our range target. Okay. I think we're very close to that. I think the trend will continue. The velocity of the depreciation might slow down in October.
Okay.
That's
okay. Samiran, now for the big math. I know some of it is guesses, but some of it is hard data that you have in terms of number of amount of remittances from the US. Just take us through the math. Because of incremental H-1B visas not being given, let us assume it is zero, what may be the impact in terms of inflows?
So thanks, Lata. And let's start from the beginning, that there are 3 different channels through which it will play out. Okay. One is the remittances channel, the second is the software service export channel, and the third is the professional management and consultancy services channel, which is roughly known as the GCC channel. So first on the remittance channel, right now, about 28% of India's remittances come from US, which would tantamount to about $35 billion a year of remittances. Now, our educated guess is that H-1B visa holders are not the majority of remitters. Okay. So our sense is that even if the subset that will get impacted by on the remittance front will actually be much smaller than what the market is fearing right now. And then comes the 2 other components of software service exports and GCC. Here, it could be a bit of one losing, the other benefiting. So if some of these revenues on software service exports are lost, there could be a nearshoring and onshoring of those activities in the GCCs. And then the GCC exports might go up to that extent. But this is the one which will play out more quickly. The remittance one anyway will take some time to play out, because the existing H-1B visa holders will continue to remit. And so that's where, although if you look at it from a top-down perspective, the total exposure of these 3 segments to US is 4.5% of GDP, a very large number. But actually, in the short term, the impact might be more limited, is what our sense is. Over the long term, from this limited current account perspective, our worry is that earlier what was happening was that remittances were very correlated to oil prices because most of our remittances come from GCC. Now that correlation had broken down because the North America, Europe kind of remittances went up quite substantially. Now, if that channel of remittances come down, then maybe we go back to that oil price correlation again on remittances, which could make that the fantastic growth that we had seen on remittances that might come down. My last point is that the importance of these three components on the current account is well understood. If you just see that today, these three components are about 10% of GDP in the current account inflow. And this was about 2.5% lower pre-COVID. So the entire improvement that we have seen in the current account post-COVID is largely due to this component. So we might go back to the pre-COVID type of 1.5–2% of GDP current account if this delta on this gets impacted by the H1B, but that's a more structural discussion.
Okay, yeah, I agree with you. Up until recently, we were all talking about 2–2.5% as current account deficit as a percentage of GDP. And it was a pleasant surprise that the last 2 years, we are talking about even less than 1%. That happy period perhaps will go away. But Chandresh, as Samiran points out very elaborately in his math, the remittance inflow itself is 35 billion from the US, from the various visa holders. Of this, the incremental growth only is going to be disturbed. Remittance itself doesn't look like big. What is the sentiment telling you? Why are FPIs selling? Is there a feeling that the rupee will get weaker tomorrow even more? So let me sell and buy back. Is that kind of a sentiment playing out?
See, the thing is, it's not just the H1B visa issue. I don't think that's a big mover for the market. I think it's the overall sentiment, which is bad for INR right now. Like I mentioned about tariff situation or the equity outflow. People are just worried about how inflow will come back when you have all the negative news coming back. So that's why I think the trend will continue. It's the velocity might come down because you also think about October month, which we are very soon going towards that. In October month, generally, the dividend repatriation is also quite low. So that means the outflow might also come down from that perspective as well. So we think there is a slowdown which will happen on the depreciation path now.
Okay, that's good to hear. Sabiran, there's another angle which none of us look at much. The rupee depreciation also helps exporters and discourages imports. It has its own market way of reducing the current account deficit. But more importantly, with China versus the renminbi, the rupee is at its lowest. It's almost 12 rupees 50 paise for a renminbi. And until recently, we used to look at 10-11 as the average. Now we are sharply lower. Plus, China has opened something called the K visa to everybody, where it is ready to give anyone a visa. Will all these also ameliorate and improve our CAD, our current account deficit, both the market and the fact that China is acting as a counter attraction?
So in fact, very recently we have done a detailed report on trying to find how much rupee is undervalued against different currencies. And one of the findings of that report was that the undervaluation with respect to dollar is actually not that big. Rupee is much more undervalued compared to the non-dollar currencies, where our estimate is that that undervaluation could be at a historical high now. Now, that obviously makes Indian exports much more competitive into those markets, especially when, because of the tariffs, there is likely to be a rotation of exports out of US into those markets. It is possible to imagine a situation where Indian exporters will benefit out of this relative depreciation. Now, so in that sense, this exchange rate depreciation is an offset against the tariff. However, the critical balance is that this expectation of depreciation often begets more depreciation. And in that context, from an investment flow perspective, the investment flows might get deterred if, at least on the fixed income side, investors start fearing that there is a a certain amount of depreciation around the corner, which will eat into the returns. So that delicate balance is to be struck between how much relative undervaluation we can keep on INR versus how much we should bring it back. In general, I think the second half seasonality is better on the flows and trade deficit numbers. So that could itself be some sort of a buffer.
Okay. Yeah, I guess that explains why today the Reserve Bank apparently, the dealer talk is that they're heavily in the market. They are offering dollars both in NDF and in the local market. Chandresh, you want to add anything on that? You heard this too?
Yeah, we heard as well. I think RBI is trying to, sell dollars on that level. But I want to go back to your point on, versus CNH. I think there's another way to look at it. That way is probably if you look at INR on a REAR metrics, which is real effective exchange rate, and try to plot it versus CNH REAR, you will see India and INR is actually still quite expensive.
Oh, okay.
And it can depreciate even more from here on that basis itself.
Okay. Yeah, actually the CNY, I don't know about the CNH, I didn't do the calculation. CNY has appreciated a lot versus the dollar. So perhaps that gives India more room to depreciate. A very quick final question, Samiran, the other offsets that you mentioned in your note are very interesting. Can you just take us through? Fewer people will go to educate themselves in the US, fewer outflows.
So, I mean, part of it is related to the external sector, part of it is related to the domestic economy. Okay. On external sector, one of the offset is obviously that the education-related outflow, which was about $6.6 billion last year by our estimate, that number could come down if people think that there are not enough good jobs available after that education. And on the domestic demand side, one offset could be that if the software companies are paying a higher proportion of their wage cost in India now rather than paying it abroad, then that could spur more of urban consumption in India, which right now is slightly a soft spot. Obviously, these things take many quarters to fully play out. But yes, over the longer term, this could become important issues to track.
Okay, but anyway, it's good that you have put all this on the table. Chandresh, thank you as well for putting out even that CNH equation. And to just point out that things are not bleak. The market corrects a lot. And we could see the market correction itself bringing down the current account deficit because of the depreciation of the currency. It's an ongoing conversation, and I will take a rain check from both of you to invite you all oftener, given the season we are in. Thank you very much for joining us. Wrap up on Bazaar. Chart Bust is coming.
IT stocks trade with cuts after the US Department of Homeland Security proposes to change the H-1B visa selection process. Tech Mahindra, Coforge, Persistent, they're all under pressure.
Shares of Swiggy trade under pressure after the company said its board of directors approved divesting an entire 11.8% stake in cab aggregator Rapido for